Hi, everyone, and welcome at our LinkedIn Live event by Multipliers. My name is Genia Hasis. I'm CEO and founder at Multipliers, and today I'm your host. For the next 1 hour, we are going to listen to three wonderful speakers with impressive career achievements and obviously ask them a lot of questions. Today, the topic of our conversation is the new capital triangle, GCC, United States, and Asia in the next decade of tech investing. As global capital flows realign, a powerful new investment triangle is emerging between the GCC, the United States, and Asia. Family offices and venture investors are forging cross-border partnerships that will define the next decade of tech and impact investing. During the next hour, we'll try to understand what is so attractive in GCC for global family offices right now, what GPs need to know in order to raise effectively across these three regions. And we will also discuss emerging sectors attracting cross-border capital, AI, deep tech, sustainability, women-led innovation. You can use the chat and share with us where you're listening us from right now. And also, please share your questions, suggestions, and anything you want us to know about you. And now I want to introduce my speakers one by one, and I will start with Sami. Sami Beydoun, President and CEO of Crown Valley Imaging and Family Office Principal. His family is building innovation from California to GCC. From healthcare to tech, Sami bridges operational expertise with multi-generational wealth strategies, showing how top family offices navigate the next decade of global capital. Sami, please share with us what is your primary interest in GCC right now?
Thank you, Genia, for putting this webinar together, and thank you for having me. My interest in the GCC is from personal familiarity. I do speak Arabic fluently, so it does have a degree of openness to our family office. And I'm really interested in the growth potential and the emerging talent in the region. I think the GCC is investing heavily in healthcare, IT, and tech. And that's really what our family office focuses on. With our imaging centers, we're definitely healthcare focused. With our investments, we do tilt toward healthcare. And with the rise of AI and innovation, it really ties naturally with healthcare. And I see a lot of potential in the GCC as geopolitical and economic investments are made in the region, both private and public sector. And so we're very excited about the GCC region, and I'm trying to make inroads to grow in that region and grow in that area.
Amazing. Thank you very much. And my next speaker is Piers Dunhill. Piers is an accomplished early-stage investor with a diverse portfolio across impact-driven businesses. Through Dunhill Ventures, he focuses on companies that create positive environmental and social change while delivering sustainable results and exceptional investor value. Piers, what are you building right now, and what is compelling to you and your family here in GCC?
Hi, Genia. Thanks for hosting the webinar. Nice to meet everybody. And thanks for introducing myself, so I don't have to do that. For the GCC, for me, I've been coming to the region since I was at school. I've seen it develop over time, and I believe it's going to continue to develop with the mindset and the goals of the leadership here. Sadly, with other European countries, they seem to be declining in many comparable metrics. So for me, I'm very long on the GCC. Also, for me personally, I like to be here because of obviously the 9% corporation tax and the pro-business mindset. So I think Dubai is really the true melting pot of the world, especially. So for me, those are all the reasons why I want to be in the GCC.
Interesting. Great. Thank you very much. Next, I want to introduce you to Edwin Wayne, who raised top quartile direct investment funds with Goldman Sachs, Harbor West, and Paul Capital, and advised on more than $5 billion in portfolio and fund restructurings. Right now, Edwin is a senior advisor at Sandbox AQ, and I'm curious to learn more how does it feel to be an advisor to Sandbox, of course. but also what plans does the company have in GCC, because we're all so excited about bringing such a powerhouse here in the region.
Thank you for having me, Jenya, and wonderful to be with all of you. Good morning, afternoon, and evening. So as far as my sort of bona fides with GCC, I've literally been traveling there for decades. Sandbox AQ is one of the probably most impactful companies in the AI, digital transformation, quantum computing technology stack today. So I'm privileged, honored, and humbled to be an early investor in the company, advisor, and board member. The company is a spin-out from Google X Alphabet after having been incubated there for 6 years. The chairman of the board is Eric Schmidt, who was the chairman CEO of Alphabet and Google over a 20-year period. The CEO is truly a super intelligent polymath who continues to defy expectations. And obviously the company has a significant footprint in the region. The region obviously has tremendous energy dominance, which is going to be really pivotal and crucial to the entire AI story as it unfolds. The human AI and collaborative future, as human agency, dignity, will have to be really essential, to the whole AI story again. This has resulted, so for example, in the Gulf region with a recent announcement that Sandbox AQ is building a biotech ecosystem with the Sovereign Wealth Fund of Bahrain, which is also an investor in the company and a commercial partner. What it essentially does is to utilize the large quantitative models and quantitative algorithms built on the AI platform developed inside of Google. But now, an independent company, Sandbox AQ is a $1 billion capital stack with a total contract volume that is quickly approaching mid 9 figures. And it's a company that obviously is serving healthcare, technology full stack. This announcement that you just showed is actually a $1 billion total market value in terms of wealth creation in the region, and building catalysts for speed up for drug discovery, utilizing AI and quantum techniques.
Interesting. I just came from Forbes Middle East conference here from Abu Dhabi, and there was a lot of also different announcements, and said that you wasn't there, but I do think that probably you will share more during this webinar about the company and then how it will also work with Abu Dhabi government and different companies. I see the chat and I see that people are from Ukraine, Dubai, Vienna, Amsterdam, a lot of from Europe. And then I really want to ask our audience right now, who is raising venture capital fund, who is VC, and then also please continue sending us notes where you're listening us from. And before we go further, I want to remind that in 15 minutes from now, it will be your turn to engage with speakers. Definitely send us your questions. But I also want to share what I'm preparing for Global Family Offices. December 7th, I'm organizing a family office summit for 30 families from Asia, United States, and GCC, so that they can cross-share the portfolio, co-invest with each other, and scale businesses on different markets. This is our second edition of Family Office Summit that we are co-hosting together with Legacy 8 Family Office, and looking forward to opening doors in the iconic venue, Louvre Abu Dhabi, for our guests in 3 weeks from now. So if someone is interested, definitely I'm waiting for your messages in my on my LinkedIn. And moving forward, I also want to ask a question to all of my panelists, and please share your knowledge on that. How many family offices are moving from passive LP to active deal makers? Because I see the trend right now here in GCC, but maybe someone of you will disagree with me, and please correct me if I'm wrong. Edwin, do you want to start?
Yeah, thank you. Just had to take myself off mute. So family office leadership, what we're seeing is they're leading rounds, they're digitalizing through advanced platforms, they're setting up regionally for hands-on innovation. They're bridging strategy, execution with patient capital, deep networks. Recently, for example, we're seeing sovereign wealth funds and family offices sort of coalesce through partnerships, and partnerships really will be key. Collaborative partnerships, I think, will be the driver.
Great. I see Katie is raising fund from Boston, second fund to support global founders building in health, wealth, work, and sports. Amazing. So we have America here. We're only lacking Asia right now to have the full triangle. But maybe someone else also want to answer this question about direct investments versus investments as LP.
As a family office operator and a business operator, I do like to dig in and really get into the details of whatever kind of investment that we make. And I find that the more knowledge I'm able to contribute to the venture, especially if there's something I have familiarity with, I can add to the success and also monitor the investment more closely. So I definitely agree with you that there certainly seems to be this trend of family offices getting more directly involved rather than just being an LP.
And maybe I just have a follow-up question. Maybe you can also share when you're investing as LP, what kind of funds you're mostly interested in?
Very traditional real estate. It's something I know intimately, and something that we see as a very long-term horizon for, of course. And so it may not be the most exciting investment, but certainly adds to wealth building and growth over time.
Mm-hmm. And Piers, I also know that you invest also as an LP and then direct investments. Do you also see the trend that is moving from LP investments to direct deal making?
Yeah, I always prefer to have to go direct, or to be able to access high quality co-investments through being an LP in a fund. Obviously, that's the main reason for doing it for me. For traditional investments, I believe I can do it myself. So real estate and private credit and things like that, I usually don't need to get creative with investing in funds. There has to be a very strategic reason, or if they have the expertise in a very niche sector. For me, it's more interesting than just a general investing generally through someone else. I mean, I believe I have the capability to be a good investor. I don't need to rely on someone else. And my experience of direct investing has been better than with funds, especially in the VC space since 2019. Generally, the performance hasn't been great. So.
Yeah, I can also say that my personal portfolio of direct investments are 3 times bigger than my LP. And then also my LP investments are less successful than direct investments. But I also thought that it's just because this takes specific knowledge how to invest. And I'm doing that probably just for a couple of years and learning. But it's interesting. And so I also want to understand, let's say, from the point of GPs, because there is a lot of GPs here and some people are sharing that they're raising funds. Maybe we can also talk about the topic of fundraising for VC funds. What GPs need to know to raise effectively across these 3 regions? What would be your take on that? Maybe we can start with Edwin, with you.
Yeah, I would say that, in this whole evolution of democratizing accessibility to information intelligence, I'd actually led one of the first direct secondary fund creation vehicles with HarborVest. This is going back a bit. But I think the operational value add is important to really demonstrably be able to show a compelling value proposition to would-be limited partners and investors, that there's differentiation, that there's operational and tactical value add that a GP can provide, whether it's cross-border, regional, deep domain within a particular part of the tech stack, and then just sort of fleshing out, obviously track record, performance are important, and then just sort of this notion of being less than entirely just sort of passive.
I also do think that we can even rephrase this question. How to raise, let's say, $100 million fund. Maybe you can also have your, tips and tricks how to do that. Maybe you can share that, Piers.
Yes, it's quite a specific question. I mean, to raise, well, you need to start small and build it up if it's your first fund, right? So it's
Yeah, but
100 million.
Yes, you have a lot of clients who are raising these size funds, so you definitely know.
Sure. Well, obviously the amount that the GP commitment's putting in is important, right? So if you want to raise 100 million and you're putting nothing in, that doesn't look good. So between you and your team, you need to be able to get a significant amount in. And then also obviously securing your anchor investor obviously is the most important thing. Offering them flexible terms, be part of the GP, and then going out and the GCC, everyone focuses on just Saudi and UAE, when actually there's Bahrain, Qatar, Oman, there's so many, and Kuwait, there's lots of places out, there's a lot of other countries you can go to where there's lots of private wealth. So it's just looking outside the box. But also in the region, it does take longer to raise money. So culturally it takes five, I would say at least 5 meetings before you get to hardcore due diligence or term sheets or anything like that. So it's not as quick as in the US and in Asia and Europe, but it can pay off for the long run. So it's definitely worth, there's nothing worse than going to Riyadh and asking for money and then not going back. You have to go several times and build a relationship with people. That's one of the things that I would advise. Yeah.
I thought that you mean that staying there forever. But it's also interesting that some people say that you also shared that this is an advantage when you offer them to be also co-GP. But from LP standpoint, is it actually valuable to become part of a GP if they consider it as a passive income?
Sorry, so ask the question again.
Yes. So let's say if you're LP and then someone is offering you also to be co-GP, then this is and then you consider it mostly as your passive income. Is it actually an advantage?
It's an advantage. Of course, it's an advantage to get GP. You make more. It's an advantage. But I think they wouldn't give you GP unless you're either raising money or you're an anchor investor or you're a venture partner or something like that. So I think that's just if you get access to it, obviously that's great.
Mm-hmm. Great. I think I also rephrased this question once again, Sami, and I'll ask you from the people, let's say from all cases when people were raising from you and they wanted you to invest in their fund, maybe you can share some cases when it really went not very well, or people made some mistakes, and maybe you have some suggestions how usually people can fix the pitch.
Sure. So we get approached by family and friends more often than random interactions in terms of getting pitched. For us, we really need to know the operator really knows the business very well. Recently was pitched for a pharmaceutical type investment, and the principal, they had some familiarity with the industry, but it was not their core focus, and we had to pass. We need to feel the level of trust and familiarity from the operator that they really know what they're doing. Intuition guided us that, it maybe wasn't the best fit for us as an early, angel investment. But maybe in future rounds, things look better. Really the pitch, I think, is you really need to have operators who are 100% experienced in the field.
Mm-hmm. Okay, great. So I do think that we covered this topic very good. And I also really want to talk about industries. And then maybe we can also answer one question, all of us. Which tech verticals do you see as most promising for cross-border investment over the next 5 years? And then Edwin, let's start with you.
Yeah, I would say from my vantage point, it's AI, it's quantum, it's cybersecurity, it's health tech, and then it's climate and energy transition. And just, to follow up on the last point in terms of, sort of fundraising and capital flows, what's important, I think, to recognize is that, capital is very much now without nationality. And so it's borderless, and therefore there's as much inbound interest into the region in GCC, for example, as there is outbound. So that what's really sort of critical to the exercise is what is the value creation mechanism and model. So from that point of view, that's sort of another compelling asset rather than sort of thinking about this, strictly as a one-way FDI vector, from GCC into the rest of the world, especially as, with MBS in Washington today, as a matter of fact, the sort of limits and capacity constraints for KSA, Saudi Arabia in particular, make for more of a sort of, again, sort of positive sum standard.
Great. Sami, I do think that you also want to add something.
Sure. I'm very excited about healthcare tech. I see it as, speaking from our experience in the US, it is one of the most highly inefficient industries, and there's a lot of innovation that needs to be made, particularly on the workflow efficiencies. And so we're very excited about that kind of technology. And I'm sure in the GCC, there's a lot of investment made into healthcare tech as, rising healthcare costs dominate, in the US and abroad. There really is an opportunity for a lot of skilled healthcare and tech professionals to build solutions to solve a lot of these inefficiencies. And I feel like that is something that we would like to get involved in more.
Yeah, I also can share the case that I'm working right now with a company. It calls Nevel Devices, and they're raising 8 million bridge to pass through FDA. And then we were together at this conference at Forbes Summit, and we understood that in GCC and especially in Abu Dhabi, clinical trials are faster and then cheaper. So for a lot of companies, I see, especially in cancer treatment, they're trying to pass at least first clinical trials here in Abu Dhabi, and then after that, go back to United States and schedule second and third clinical trials. So this is probably one of the advantages of building these cross-border innovations. Piers, I think that probably your specific industry will be Web3, but I really want to know what is your, how do you see what is the most promising?
No, I wouldn't say Web3, to be fair. I think definitely anything with healthcare, so biotech, health tech, med tech, because, for example, the UAE is a federation of monarchies. It's often quicker to get regulatory things approved if you have the right contacts. So do a lot of licensing deals. If you have the right technology, then the UAE has, and even Saudi too. They have their their 30-30 vision and all of their targets. So they're very quick to want to have the best technology implemented in the region. So huge opportunity to move to get business done quicker than in, say, the US. So that's also healthcare for sure. And just in general, in Dubai and Abu Dhabi, they're often competing cities. So they want to have all the best brands, the best, the best of everything. So there's many ways to many different industries that are, coming to the UAE. So, yeah.
Yeah, so I also understand that there is a lot of advantages why you should be in United Arab Emirates, but also maybe there is some things that are also blocking the development of companies. So let's talk about are there specific catalysts or barriers new investors should watch for as they seek opportunities in this triangle?
I'll take a stab at that. So, AI and non-AI. I mean, 40% of all VC exits in 2025, 317, including the well-publicized CoreWeave, were accounted for by AI. You see vast sums, that are taking place in terms of transition, energy transition, climate, between Mubadala, GIC, into China, quantum computing in China. There was a question I saw flash on the screen just a second ago, with respect to sort of all of this investing into hyperscalers, data centers, compute, and energy, of course, to power data centers. Where's the payoff? Where's the ROAI? And I think the questions that pertain to this are very real, as we're obviously seeing a little bit of a reckoning, in public markets recently. The real question then becomes what's usable AI, what's practical AI. You now have, for example, small language models that are demonstrably showing results. You have large quantitative models, as with a company that I represent, Sandbox AQ. You have the world model that Feifei Li had described at FII 9 with Eric Schmidt, our chairman. And of course, UAE, as someone spoke importantly, as a federation of monarchies, is very much part of this sort of speed up, where time savings will trump the actual dollar or dirham savings. Speed up, speed out, and scale up, for drug discovery. But utilizing, again, in the case of Sandbox AQ with a Catalyst portfolio for both biology and chemistry, in partnership with NVIDIA, and utilizing quantum computing algorithms before we have quantum hardware, just to be clear. I know there's a lot of terms that we're throwing around here, but trying to make this as comprehensible as possible. Thank you.
Thank you, Edwin. I'm going to add on to your comments. So what I've seen and heard is with AI in particular, there's a lot of these companies that are essentially ChatGPT wrappers. They're built just on ChatGPT with a very specific focus on a niche that wraps around a ChatGPT, and without wading too far into whether AI is a bubble or not. There are a lot of companies that may not survive this wave of kind of the rise of AI. I think to be truly successful, there needs to be a product that will solve a major problem. I mean, I myself in our business, I'm dabbling with AI. I built a couple in-house tools, and they solve a very specific purpose. So I think with the rise of the AI companies and infrastructure and software solutions, there really needs to be a true focus. It can't just be a catch-all wrapped around a ChatGPT.
Sammy, could not agree with you more, because And in fact, this really you've addressed and hit the nail on the head with respect to Sandbox, as a differentiator, for example, with large quantitative models where 80% of the physical world, of industrial chemicals, plastics, energy, battery chemistries, material science, biology, computational chemistry, computational fluid dynamics, molecular biology, all of the sort of subatomic understanding is not captured in an open source, internet scrubbed ChatGPT or Gemini or Anthropic Claude, which are great for customer service, for improving efficiencies, and for writing haiku and great sort of curation and orchestration that all of us are using. But at the same time, the actual physical world, which defines robotics, and if we're going to have autonomous driving, if we're going to have any of the sort of applicable benefits of AI, which I think we're still in early stage at this point, there will be separation. You're absolutely correct that it's not democratic. It may be democratizing, but it's not democratic in terms of the sort of coming separation and competitive shakeout and pruning, which are sure to happen.
Yeah, look, from my perspective, I think a lot of investors would have missed the AI rush. I think if you're getting in now into the AI space, you're a bit late. So, for example, Sandbox, which is an incredible company, I urge everybody on this webinar to check them out. They have so much funding by all the top investors around the world. They're not actually fundraising. So for me to earn equity in a company like that, how I'm adding value is I'm introducing them to governments and to various large family offices that control large industries around the world. And that's because the contracts they're paying are enormous. And I see the Sandbox valuation going absolutely through the roof if you look at who's on the board and where it came out from. So if you're trying to get into the right AI companies now just for investment, if you're not a sovereign wealth fund, it's very difficult. So for me, that's my angle. So I'm very bullish on and excited to work with Sandbox.
I also want shares of Sandbox. Can I also introduce them to some family offices? So right now we do understand what is interesting in GCC, how the triangle works, and then what are the industries, and actually how to raise capital from families. I do think that right now is the time to open an opportunity to our listeners to ask questions. But before that, I have an idea. I noticed that Tan Mei just shared his thesis. I will share it right now on the screen. So he's raising Fund 1, 5 million seed fund in India, B2B technology startup in deeptech, health tech, and SaaS, leveraging 500 million in sales, over 100 companies in 5 years. So this thesis looks like Tan Mei is right now studying at VC Lab by Founders Institute. I also passed through this program. This is the program for emerging fund managers. And the way it's worded, it's just the formula, how they usually teach emerging VCs to pitch. And I really want everyone right now to give feedback. When you see this type of thesis, what would you think about? Is it appealing, or is it something that need to be tweaked and then probably rephrased? Because all of you are experienced LPs, I really want us to help to Tan Mei to close his fund.
No, I'm actually very sympathetic to early stage, seed growth funds, as we actually utilized one in a restructuring to eventually grow an entrepreneurial investment and commitment that spawned the forerunner to Moderna. So from that perspective, it's humbling, but it's also daunting in terms of understanding how overwhelming the odds are and how the deck may be stacked. What I might be able to offer is that ecosystem and talent mobility, I think, are crucial to Tan Mei's question in consideration. Infosys in India, for example, launched an AI-first GCC model to help global firms turn regional capability centers into scalable AI-led hubs, enabling talent movement, digital innovation. You've got cross-market accelerators and incubators that are launching strategic programs in the Middle East and Asia, and very much promoting founder and executive mobility. So one of the things that I would sort of concretely suggest to Tanmay is that, sort of a Y Combinator like benefactor would be someone to seek and be sought after. And sort of the great thing today is I truly do believe that, if you wanted to start a business, you want to start a company, you want to start a fund, you've got intelligence. You have a savant in your hip pocket, with your smart device. You've got basically a median 148 IQ. So if you think about that, as I talk about talent mobility and borderless capital, reach out, use networks, use LinkedIn, utilize forums like this to interact, to collaborate, to learn from, and also to teach. So those would be my concrete 2 bits.
Building kind of on what Edwin said, my comment was, my thoughts are, start with your inner circle and expand from there. The people closest to you, friends, family, colleagues, your inner network are really who are going to kind of jumpstart a startup fund. Because, approaching outsiders without a proven track record, I think may be very difficult. So you really have to start with your inner circle, get buy-in from those that you work with or know your business model inside and out, and expand from there.
I think that probably also the question is that how difficult it is to raise first-time fund when you're first-time fund manager. And then also just because it is difficult, maybe someone who is listening to us today and then you're raising first fund, maybe you can also share your thesis so that we can also help and then brainstorm how to better maybe present it. But my idea for this specific thesis was that I think that the mixture with deep tech, health tech, and SaaS, maybe it's a little bit too wide angle, specifically for India. I think that if you can narrow it down to just one industry or maybe health tech and deep tech, maybe it will be better for me as LP. Pierce, what is your thoughts on that?
Well, so as a first-time fund manager, the difficulties of raising, is that the question?
Yes, and then also your comment on this specific thesis.
Well, first-time fund managers, of course, it's if you're raising from family offices, which you would be because the institutions wouldn't invest in a first-time team. The relationship process takes longer. So I would say, people think that they're going to raise in 6 months, but it's probably going to take 18 months is the reality, because you're competing against the whole world. So that's why you have to rely on people like Jenya and myself who have relationships with family offices all over the world. And I also run an advisory business, and we've done over 700 roadshows in over 35 cities globally. So, and if you have a strong name, you can access other families that bankers and private placement agents wouldn't be able to access. So that's one of the things that I do, and it creates an amazing community which I can then work with to make the world a better place. So I'm very much into conscious investing, and as well as I'm an entrepreneur. So I have for example, a high yield forestry project, which is I'm working on many projects in that industry around the world. But I'm diverting here. So going back to your question, yeah, first time fund managers it's a marathon, not a sprint.
Yeah, I also have a case. So I was working with a fund, and I brought them into GCC. So I introduced them to maybe 20 or 30 different families in United Arab Emirates, in Saudi, in Bahrain, in Qatar. So they had just one meeting with each, and then it was in May. So right now it's November. They came back here, and then before that I think that they didn't even have one call between May and November. And so right now, the thing is that they're sharing that, okay, so out of 30 that we connected last time, there were just only 10 people who wanted to continue talking with us about the fund, and then no one closed for now. So my pitch to them was that definitely, if you don't maintain a relationship with these people, they're gone, right? You really need to follow up, you need to share your updates, and then there is a lot of relationship building, exactly like you said. So, and then also the mistake that I noticed that they're making is that they're trying to measure the conversion rate just from one event in closing, from one, let's say, from one event that had 30 participants. So I do think that maybe previously it was easier to close. I don't know. I'm in this industry for 4 years right now. And maybe 10 years ago it was easier. I don't know. I really want to understand what is your, how do you see the industry change?
I'll jump in. Sorry, I'll jump in. Yeah, look, when I was investing heavily during COVID, it was so easy to raise money. You know, I was doing SPVs on angel lists, and in 24 hours we would raise $5 million. It was completely insane. It's not like that now. And the VC space, you know, anyone that says they're doing well is either in the 1% or they're lying. So, you know, it is harder to raise money in certain sectors, right? So, but everything is cyclical, so I'm sure it will come back. But it's easier right now for me because I'm raising money for all different industries. For me, you know, real estate and private credit is just easier to raise larger amounts of money for infrastructure deals and things like that. You can raise. For me, you can raise huge amounts of money very quickly. But the VC, you know, raising money for first-time funds, like I said, it's a process. So, and everyone wants to be an entrepreneur. We're now in a generation where, you know, AI is taking over jobs, and so you're competing against everyone. So it's also more of a challenge.
Just to add to Piers' comments, with the changing world, I think there's a lot of risk out there and a lot of risk-averse investors. I think nobody wants to invest in that, moonshot that will probably go to zero. So people are taking a more traditional approach, I think, to investing in more core or asset-based investments. And so, with Sandbox and other, large companies like that, they're really kind of dominating the innovation space. But I think for small scale investors, smaller family office, they're probably looking for more stability and long-term wealth preservation rather than moonshots.
Yeah, I would say that, look, some excellent points were made here about sort of the fundraising process, but I think it's important to bear in mind that, cycles do obviously come, go, they might rhyme, they may not repeat precisely. And if we just sort of look at these innovation cycles, I mean, I frankly think that AI is more consequential than fire, electricity, because you're looking at the infinity scale up of intelligence and an alternate intelligence, right? For the first time in human history. We don't know, no one knows exactly what the contour shape of that vector is, but we all know where that vector is headed. And so, one of the sort of provocative questions I'm sort of noodling with here as I'm listening to these excellent comments and observations is the extent to which AI can be applied to the process of matching, asset allocation and sort of generating more optimal versus adverse selection outcomes in terms of matchups for family offices, for institutional capital. And earlier when we were describing sort of this sort of banding of LP driven versus GP driven, direct versus passive, and so on. I think that the totality of all of this means that the efficiency of capital returns will probably be something that will be transformed dramatically by sort of computational high dimensional analysis. As financial markets are beset by the innovations of AI. We don't know exactly how that looks yet in terms of winners and losers, as there inevitably will be. But just think about Mag 7 creation, post TMT meltdown of the early 2000s, and that moment of mobile wireless, the sop up of the bandwidth trading capacity, the excess dark fiber. So think of it, it's hard to time, but I think Sammy made an excellent point earlier about operators choose the best leaders. Piers talked about sort of thematic, get the thematic investment narrative right. And then just execute. And that will sort of drive a process that ultimately lead to success sustainably.
Yeah, I also think that the market will just wash away GPs that are not performing well, to be quite honest, especially with AI. And then there will be only people who definitely generate consistent returns for LPs. I also see that there is a very good question from Katie, and I think that this is ideal follow-up question after this thesis that we shared. So what is the what is the true differentiation on the go-to-market and sales side for VC funds? I'm thinking that, so the previous thesis was that this founder, he is leveraging his expertise in closing $500 million to 100 deals within 5 years. I think this is probably one of the differentiator, and then probably you can also have some more ideas on that.
Without knowing a lot of background, of course, on Katie's VC fund, I would just comment boots on the ground. You really have to be there. I think aside from building strong relationships, I think your team should probably be bilingual and culturally aware of how business gets done overseas versus the US, the legal framework, the structure. And that would probably lead to a stronger go-to-market strategy.
I'm also trying to understand differentiating factor when you pitch to LPs or factor of success in general. Let's say if you are in GCC or not in GCC and then you're investing, what is your differentiating factor for startups or for LPs? Maybe Katie, you can specify that.
Yeah, I'll take a stab. I think that Katie raises an excellent point in that, alternative assets, which really cover a multitude of sins, have always, I think, been plagued by this notion that how much true operational value do they help companies, portfolio companies, investee companies create and spawn. Typically, it's not imaginative. It's very much sort of shrink wrap, cookie cutter, where they sort of look at this as just one big DCF exercise and DPI, hopefully for them. But it goes to, I think, thinking outside the box, being bold and innovative, and drawing upon sort of value creation networks. For example, reaching out to peers was sort of inspired by this notion of, going really down to ground with high level, high touch relationships that are impactful, and those that can sort of change the gradient of go-to-market and commercialization, because in my sort of earlier sort of career, revenue was always the cheapest form of equity. So it makes, total sense.
Yeah, especially for GCC, people really like companies that generate revenue. But who will bridge the gap between starting and then MVP and then when you start generating revenue, right? So Katie actually specified her question. She said pitching to LPs, and then commenting on Sami what you just mentioned. She has a GP in Dubai. Piers, do you want to add on that?
Sorry, say the question again.
Yes, so there was a question, what is the true differentiating factor for LPs on go-to-market and sales side? If you're a GP and that is building cross-border expansion.
I'm trying to understand your question. So you're asking what?
On the screen, yes. So
on the screen. Sorry, this on the screen. Oh, I see. Okay, from Katie.
Yes.
It's on the web.
We have deep relationship in both.
I see. Yeah, of course. Well, that comes down to the people, to the GPs, right? The quality of the GPs. So are the GPs people that have entrepreneurial experience? What's their track record? Do they have relationships all over the world? I mean, it's just fundamentals, right? So I get to, if I was to invest in a fund, I would get to know the GPs and the strategy and look at everything. So
but if you're evaluating the performance of GPs, or what are these markers that you're usually looking into when analyzing the GP structure, or who are the GPs?
Well, there's all VCs are different. There's passive VCs and active VCs. So you want to work with active ones, obviously, right? So you need to choose the right people to invest with and to work with. So most managers are not you're going to lose your money with most managers, right? So you have to find the needle in the haystack.
Sounds not very optimistic. Yeah, that's true. So we have next question, and this is a very specific question. I've worked with GCC-based AI and health tech companies, mostly Bahrain and Dubai. What differentiates Bahrain from global investors today compared to other GCC hubs? Besides energy, what are the key bottlenecks? Yes. Mm-hmm.
Yeah, so this was kind of tailor-made for that announcement that we shared earlier with the Bahraini sovereign wealth fund, Mumtalakat. So that was creating a biotech colossus with speed up, utilizing a quantum understanding, which means subatomic, and understanding it from the point of view of electron spin. The biggest problem with drug discovery, which is a 15-year process that many of us are familiar with, that often takes $5 billion, long lead times, and very, very high failure rates, 86% on average. So the US FDA, for example, has 47 drug approvals on average per annum. And maybe one, maybe two out of the last 5 years have actually truly been life-saving or life-changing, which is a horrible yield, right? So we're talking about how bad venture fund yield can be in terms of trying to spot winners versus losers. So when you think about being able to have a molecular subatomic understanding from the same intellectual provenance that brought you AlphaFold, which was a Google, discovery and innovation. How the folding of proteins that gave rise to gene editing, the Jennifer Doudna, Emmanuel Charpentier moment, which was sort of like a chat GPT moment for gene editing and genomic understanding. I mean, alongside AI, I think one of the reasons that we're so excited about healthcare specifically is liquid biopsy, synthetic biology. When you take sort of math and its core understanding to physics, biology, and chemistry, that's not only game changing, that's life saving. So Bahrain is kind of unique in that it's a small ecosystem, or a smaller ecosystem, that has both this health stack. Mumtalakat is quite sort of formatively crucial to the entire enterprise, where 70% of the companies, for example, on the Bahrain Stock Exchange are accounted for by Mumtalakat companies, including recently a partnership that we constructed at Sandbox with Aluminum of Bahrain for new material science. And this sort of helps with that whole climate energy transition for capture, storage, utilization through new materials, and reimagining and repurposing of otherwise hazardous materials and products.
I think, Ed, you covered all of it, and then probably we can have the next question. Beside energy, what are the key bottleneck for AI and data? And I see that probably there is a couple of more, but probably we will take just one more question and then.
I think, sorry, Ed, I'll jump in real quick. Quick comment. I think talent. I think finding people who understand AI and can build LLMs and can build actual solutions, not as we talked about earlier, wrappers of ChatGPT or Gemini or Claude, but really true talented people who understand AI and can build solutions on top of AI.
Yeah, and I think that data is key for AI, but also the fact that we all are right now contributing to educating OpenAI AI, right? So this is very interesting. Piers, you also want to say something?
No, I'm just listening in, but I believe almost, is this the last question? What was the last question?
I do think probably we can just go to next question. This is okay. So it's probably not a question, but a comment. Currency wars. Probably we definitely should talk about that. National debt here, stateside. Let's probably talk about that. If someone want to comment on that.
I would just add to Bobby's comment, not just the capital markets, but real estate as well. There's a ton of investment from these firms into single family residences. And I think that is one of the critical things, especially with housing affordability being such a big problem in the US. You have these large firms swallowing up tens of thousands of homes at a time. And contractors and construction can't keep up with the demand. And that's causing, this housing crisis, at least here in the U.S.
Well, and I think that, the capital flows, macro trends that have been so important to this whole topical discussion today, of capital triangle and reshaping global tech investing. It's all predicated on so much of the, shifts that we're seeing in regions. Acceleration of de-dollarization, local currency settlements for tech deals, rise of new regional tech hubs like Riyadh, Singapore, Abu Dhabi, Shenzhen, and going forward, role of data sovereignty, cybersecurity, regulation readiness, because policy and politics are toxic on a global basis and will really need to be addressed by sort of stable governments that have enough rational pragmatism sustainably to make decisions, before, we lose all human agency.
I think that we're right now leaving our listeners in a very confused state, that everything is difficult, crypto is difficult, to raise the first fund is difficult. Someone just commented that health tech is a tough place. So I really want everyone right now to just share one piece of advice, how to go through all these difficulties and then still get your ROIs. So probably you can start.
So the positive spin, Since the world is so interconnected and it's so easy to reach people, forums like this are amazing because you're bringing together people from all over the world to share ideas, concepts, and I think more of this is what's needed, especially with such an easy way now to connect with people. You can talk to someone in Dubai, Hong Kong, LA, just like we did today. And it's just so easy to make connections and share ideas and really learn from one another. And I think that's kind of what's great about today's world.
Thank you, Simon.
My hopeful thought of benediction here is that, we are living in, I think, one of the greatest times. And then as we solve for intelligence, we will then be able to harness the benefits of utilizing that intelligence to solve for everything else.
Piers?
Yeah, look, if anyone wants to get in touch with me after the webinar, happy to talk through my experience of and ways of thinking outside the box to raise capital globally and see what we can, if we can help you in any way.
Yeah, and probably my 30 seconds is that I really like to organize this kind of events because I always learn from people from a lot of different countries. And then recently I just understood that conferences are great, but also networking events are probably adding a lot of value, probably sometimes even more because people are so relaxed and they're talking not just only about VC, but also about life, about things, how to overcome stress. And then when you lose a deal and then things like that, I usually shared in a networking environment. That's why I organized a yacht for family offices in May and continue doing these events. And then Louvre will be the next. And I hope we will continue organizing them at least once in 6 months. But also, I will highly encourage everyone to follow my LinkedIn and then check for webinars, because every single month I'm organizing webinars with GPs in the region or with family offices from different countries. And this is the best way to connect, to ask questions. And it was amazing energy today. I'm super grateful for every single person who asked us questions. And then, guys, you can share your contacts here, continue in the chat, and then obviously reach out to our wonderful speakers today. Thank you, Edwin, Sami, Piers, for your time.
Thank you.
And
Thank
then
you.
I hope that you enjoyed it.
Thank you. It's great.
Amazing. Have a good evening, everyone.